Hi, welcome to my video. My name is Will Follett, and today we're going to be learning about the circular flow diagram or circular flow model. But before I do this, before I explain it, I want to get to reviewing the factors of production. And there are 4 factors of production. The first is labor, and the labor is the workers that work in the economy, and the factor payment for this is wages. The second factor of production is land, and the land is the land that is rented or purchased, and it also includes the raw materials and the resources that are found on the land, and the factor payment for this is rent. The third factor of production is capital, and the capital is the money used to buy tools that the laborers implement to convert the land to goods, and the factor payment for this is interest. The fourth and final factor of production is entrepreneurship, and these are the people who put the other 3 resources, the land, labor, and capital, the other 3 resources together to create a successful business, and the factor payment for this is profit. Okay, so now you'll need to know these for the circular flow model. So now let's get to the good stuff. So here's a circular flow diagram. So the circular flow diagram explains how resources and products and money are circulated throughout the economy. And in this diagram, there's a household sector and a business sector. And between these, there is a product market and a factor market, often called a resources market or resource market. And the first one we're going to explain is the product market. And so the product market, what this is when the businesses sell their products, their goods and services to the households to make money. They sell their goods and services to households, but they need resources such as workers and machines to make these products. And the workers and machines are found in the next part, in the resource market. And this is when the households own the resources, which are then sold back to the businesses. And this creates the flow, the circular flow. And so as a summary, overall, the households purchase the goods which businesses provide in the product market, but businesses need resources in order to produce those goods, and members of the households provide the labor in the resource market. And in turn, businesses convert the resources into goods and services in the resource market. So an example of both a resource market and a product market would be a mall. So now we know that, I'm going to explain the role of money. So the role of money is, so money goes the opposite way. So as you see this top line, it goes the opposite way from the flow diagram, and basically says when you buy your product in the product market, you pay money for it. You have to pay money, which is called consumer spending, and the money goes to businesses, and they call it revenue. And they don't keep all the money, though. They use it to buy resources, which is called cost, or cost of production. And then it's paid to workers, which then becomes their wages or their income. So that's the role of money. So now let's get to the government's role in this flow diagram. So the government is very important, but is not included in the model. So let's go to a new page. It's not included. But this is called the public sector, which is what the government is in. So the government helps and plays a part in both the product and the resource market. they buy things from the product market, from the business, and from the household sector. But they buy from the business sector. They buy fire trucks or police cars or any other produced good or anything. And from the resource market, the household, they hire teachers or firemen, any worker that can provide labor for them. And both of these are, by doing this, both of these are called government spending or government purchases. And the government uses their resources and their goods to provide public goods like roads and what else? Fire service or a police force or anything like that. And the government also pays money to businesses called subsidies, and the subsidies incentivize manufacturing on a specific good, or they can, but so they pay money to businesses called subsidies, which is government spending as well. And they also pay money to households called welfare. So welfare and subsidies. And economists call both of these transfer payments. So transfer payments down here. And the government is also a cause of leakage. And well, what leakage is, it says it's taking money out of both markets, both the business sector and the household sector, by taxing. And these are the income and their sales tax, and these are how they afford. This is how the government affords their goods and services, as well as their welfare, how to pay welfare, etc., everything like that. So back to another thing that's not included in the diagram is banks, and banks are not included, but they facilitate the exchange of money, and the productivity turns the savings into investment in order to grow the economy. So it is a helpful thing. So the circular flow diagram is very important in the economy. So that's about it. Thanks for watching.